Loews Corporation is a US-listed holding company engaged in commercial property and casualty insurance, operating offshore oil and gas drilling rigs, transportation and the storage of natural gas and natural gas liquids, and, shall I carry on? Gathering and processing of natural gas and the operation of a chain of hotels.
Exactly, don't forget the hotels at the end there. So yeah, you've got this group that kind of formed from the 1940s and has really bolted on. The Tisch family are the controlling shareholders that have built this network of assets.
So market cap, we're looking at $13 billion, PE ratio of 58.6, dividend yield of 0.6%. This was your fund, was it?
Yes, so this actually, people speak about this as an alternative to Berkshire Hathaway. It's got some sort of comparison. I guess they've got a big stake in a property and casualty insurer, CNA, which is the bulk of the earnings. But then they've diversified, as you were saying, into oil and gas assets, both offshore rigs and then the pipelines as well. And then actually the start of the business was the hotel chain, which they're growing into a bigger hotel chain, about 30 luxury hotels in the US. So quite a disparate group, it must be said. A very good long-term track record, but much more mixed recently. Obviously, that exposure to the oil and gas sector hasn't counted in their favor recently. But I guess we were talking about the resource sector. One way to play it is actually the service providers into the sector. And you think, and we have seen oil firm to around $50 per barrel now. So actually moving off its lows, this is one way to play that cycle.
Let's have a look at the share price graph. Give us a little bit of a
Speaking of
more
moving
detail
off its lows, it seems not to be moving off its lows. Loews Corporation is still trading at its lows. I don't know, I mean, it doesn't look all that flash. I understand recently they've been doing some share buybacks.
Yes.
Because traditionally perhaps quite conservative balance sheet, and it is an opportunity to gear up a little bit and do some share buybacks at the weaker market level.
And those share buybacks always a good indication to the market that management fully believes in the model and their investment strategy going forward.
Yes, so because these are NAV plays, they would trade at either premium or more typically at a discount to their NAV. The management obviously carefully track that, and often the share itself is the best investment they can make, especially when it's at a wide discount to the underlying NAV. And then they'll buy that back. That would be considered NAV accretive when you're buying shares at a discount.
Which hotels do they own? I mean, I'd be interested to know, because maybe we could go and stay in one and try it out.
So it's interesting, they've been expanding. It's the smallest part of their business, about 5% of their NAV.
Okay, well then we shouldn't talk about it.
30 luxury hotels in the States. They're actually currently trading at around break even. They've really been expanding that business. I think if you believe, and I believe luxury hotels is an exciting sector, that they've got a good base to grow on.
And Continental Assurance, the insurance company, sizable, good player, good underwriting, good record.
Yeah, a significant player in the property and casualty space. They've been going for over 100 years. Typical insurance, has lumpy earnings, good underwriting
and then
profits.
hence the comparisons with Berkshire, because then they bought this in and then started utilizing the float.
You're invested in this one?
No, but it's something that I've picked up recently and does look quite interesting from our perspective.
Hot or not?
Hot.
Hot or not, Paul?
Now I'm going to give it a huge pass. Thank you very much.
A huge pass? I thought you were going to take Rowan's endorsement there as a thumbs up.